We are back after a crazy couple of weeks. I'm excited to be here with Kevin talking about the latest in the markets, the good, the bad, the ugly. We're going to talk inflation, jobs, the Fed, Japan, crypto, and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel, and remember that nothing Kevin or I say is financial advice. So please do your own research before making any sort of financial decisions. Kevin, we got to be delicate with your internet today. Okay, no fast movements. We may not be able to show those pretty charts of yours, so let's just do the best we can. It's been a while since I've seen you. A weird last week and a half for both of us, but how are you doing today?
I'm doing good. I'm afraid to touch anything on the computer because remember one of our most famous episodes, and then the market obviously crashed the night after. Uh, Bad internet is a bad omen for markets, but as of right now, it's kind of one of those weeks where you have to understand like things could seem one way, but they could be totally positioning themselves for something else in the future. Today is OPEX, right? And I think that's one thing that a lot of people are kind of forgetting about. I was talking about this a little bit on Twitter yesterday. August is historically known for being one of the worst months for inflows, and we're in the middle of OPEX, so people are clearly trying to make some money. We had a pretty good sell off at the beginning of the month. They're rallying into it, and we saw that JP Morgan take them at face value if you want or not, but they said that $1.8 billion worth of the stock buyback since the dip has came from retail. So it's a very interesting place right now where the markets are kind of leading one way in the narrative, but there's a lot of things under the hood, things that we've talked about for a period of time that don't necessarily buy me on the fact that we are in up only season right now. So just kind of put that out there before we get into anything today.
Let's run through some of the data that has come in this week because there's some positive stuff out there. We had PPI came in at a reasonable number. People were happy with that, where the core number came in. On Wednesday, the CPI number on headline was under 3% for the first time in a couple of years. The core number came in right in line with expectations, 3.2% year over year, less than the 3.3% seen previously. So some headway is being made there. Jobless claims came in slightly under expectation. The market felt good about that because, hey, less chance of a recession. There's just no one knows what's going on right now. Okay. And it's
Agreed.
just so funny. Like I'm watching Bloomberg in the morning and the anchors there, they don't know what's going on. You hear the people that they're talking to, who they're interviewing, and they're putting on a face that they know what's going on because most of them are, high level at a lot of financial institutions. But you can tell they don't know what the hell's going on either. I heard one guy who's in charge of like investment strategy at one of the large shops talking about how like he's telling clients to lock in cash for 5 years in a 5-year bond. Like if that's the advice they're giving you is like lock up cash and keep it in their brokerage for 5 years, you should fire that advisor. Like that's
Yeah.
absolute dog shit advice. Like, hey, let me lock up some gain on these on your holdings for 5. Fuck you. Do your job. So no one really knows what to do right now. And there's a lot of different indicators. We also saw consumer spending come in higher than expected, like a significant amount higher. Retail sales came in 1% increase. The previous month it had been down 0.2%. The expectation was up 0.3%. So no one knows what is going on. Like we're seeing salary, I saw some stats about there's less people making under $15 an hour than there has been in, a very long time. So like pay is starting, is continuing to go up for people. So you would think that the consumer would be in a good place, but then you see credit card balances once again reach all-time highs while rates are around 22 to 25%. So no one has any idea what is going on, where we're going next. You see Warren Buffett and all of these big names who have managed billions of dollars are selling off. Buffett sold off all of that Apple. You had who was it Soros who sold all of his Nvidia? I
Yeah,
mean,
they're firm.
there's like so many different signals, and no one knows what to do. Tell me what to do, Kevin.
I think we all know where it's going. We're just being stubborn about where the market deserves to be right now. I think that's probably the most logical and way of assessing kind of where we are. Consumers, people that are living in America under the thumb of 5.5% federal funds rates, they'll tell you that it feels like we've been in a recession for a long period of time, right? And I think it's easier to trust them than it is to trust the people who are feeding us the data. And that's just, that's like a tale of two cities. One way versus another. One person's lifestyle versus the data that's coming in. We've also seen that there's been tons of data revisions, right? We also know that some of that data that came in for the consumers and the retail spending, I believe like 2/3 of it was impacted by the price of automobiles. So that's another thing that we have to kind of keep in mind. Like the data, the headline, it's really easy to spin that to seem good. And I think the markets are doing a wonderful job of spinning it however they want. But we continue to see that the consumer is weak. We continue to see that rates are elevated at levels not seen before in history for this long of a period of time, right? Usually you raise rates, you bring them back down. I don't necessarily think the CPI data gives them any incentive to cut if they continue to say that, we're data dependent, we want to get down to that 2% target. We're close, but not quite yet there. And maybe in September, we don't get a cut. Like, I think it's very possible that we don't get a cut in September. But we are in I think, a deflationary period for the global economy. And again, it's really tricky right now because you have central banks doing the opposite of what the U.S. is doing, right? We got some banks that are raising in Japan, and we got some in the ECB and a couple of other ones in Europe that are absolutely cutting at this time. I think New Zealand also recently just cut too because unemployment was starting to rise significantly. Here's the thing, we're not getting a soft landing. We all know that. We're just trying to fool ourselves a little bit longer to see if we can make a little bit more gains before the end of the year. But you're playing a dangerous game here. That's all I will say. And that's what I've said from the beginning. And I had some friends text me like, hey, this one guy is saying that, not meme coins, altcoins are going to moon by November, December. I'm like, I think you're a young man. You should just be working right now and stacking cash because one altcoin might change your life, but having capital on hand if something bad were to happen, because we know something bad is likely to happen in terms of the labor market and other situations, that could save your ass in the future. Yeah, not financial advice, but that could save your ass in the future for paying bills and also buying maybe Bitcoin or some of these other stocks extremely dirt cheap. So that's kind of my stance right now with what's going on. I don't buy this data one bit. I think we're in OPEX week. Crazy shit's going to happen. I also think that the markets are positioning themselves for some major pain in the next 3 months. Primarily September is going to be really interesting. So I'm still on the side of chaos.
Yeah, I mean, I don't think alts are gonna be mooning this November. I'd say by November of next year, they could
Yeah,
be in a much better place. But I think that's a little overly optimistic, based on how strong Bitcoin looks as well, and it hasn't even gone to the peak of its dominance yet. Like I still anticipate we see Bitcoin dominance get to 60. Wouldn't wouldn't really shock me there. So yeah, there's a lot more to come. We've seen earnings season kind of begin to wrap up for the most part. Still waiting on Nvidia. I believe
that's the
that
doomsday
is
machine.
next week, correct?
Yeah,
Week and
I
a half.
think
Week and a half.
13 days or something like that. Yeah,
12 days. Yeah.
12 days. Yeah. So that's really a doomsday machine in my opinion. Because it comes after OPEX, right? And you have the September OPEX, I think in September 18th or September 20th, right around there. Ironically, lines up with the day that Trump's supposed to be in court too, for the sentencing. So obviously, like, and then we also are in the final 2 months of the election too. Crazy shit's probably going to happen in September for markets and a lot of uncertainty. But Nvidia is one that really does scare me. We do know how heavy and how concentrated it is. We see how many people are offloading their Nvidia positions. I think Druckenmiller also offloaded a shit ton of his. I think he pretty much got rid of like 90% of his Nvidia position. We saw uh, other firms are doing that as well. I'm looking at their chart. They filled the gaps. It's 5 waves move in the C wave of this correction. It's had a bounce. Pelosi's up on her position. Anything could really happen. But the scary thing would be if their earnings were shit, right? I think that's the earnings hit missed for the first time, and I think like 6 earnings calls, something like that could just be absolutely catastrophic for tech in general. So Nvidia is going to be one to watch. I think more than anything that week we should probably do a special show just for Nvidia and seeing that one, because that earnings call is probably going to be absolutely it's either going to send the market way higher or it's going to absolutely be all right. That was bull market. Thanks for showing up, guys.
Yeah, I mean, if you had bought the dip on Nvidia back at 91, you'd be up what, like
30 something.
35% in 11 days. That's outrageous.
That's
Uh,
panic too, though, right? That's a multi-trillion-dollar company trading like a penny stock. That's fucking insane. And I
and
don't think it's
Jensen
done.
keeps selling too, by the way. Like
That's the
he's up
thing.
over 500 million in shares. I know and everyone's like, yeah, but he's got so many. Well, after a while, and you keep saying that over and over,
Yeah,
maybe like it means something. Like it doesn't mean nothing. That's for
he's got
sure.
$580 million sitting on the side just from the shares that he
So
sold.
if he was
Obviously,
selling like 20 million a year, kind of a thing,
different
okay.
story.
But when he's selling 50 million every other week,
In
uh,
2 months,
like
600 million.
that's a fairly big, like that's something. Like it is something. And
Ain't
other
nothing.
like and other executive there have been selling too. Like I get it. They want to make money. But it's there are breadcrumbs. So we'll see how that goes. Nothing too much data wise next week. Powell is gonna be speaking. Where is it that they go every year?
Jackson Hole.
Oh, that's right. They go to Jackson Hole. They go do their little circle jerk over there. Can you imagine how boring it must be going to Jackson Hole with Jackson Hole's a beautiful place. Don't get me wrong.
Yeah,
Going to Jackson Hole with all the people from the Fed, that must be either it's totally crazy and they're doing cocaine and having orgies, or it's like the most boring shit you've ever seen.
I have a funny feeling they're going to be drinking their fucking asses off. I feel like they're going to be taking shots of Jack nonstop. They're like, all right, it was a
Powell
good run,
comes out
guys.
when he's talking on Friday. He starts dry heaving because he and oh God, he and Bostic were up all night,
Oh,
like pounding whiskey, like just crying about how bad of a situation they're in.
I forget what Bostic said the other day, and that's why I put him on the thumbnail when we were going to do the show Wednesday. But he said something, and I was like, um, that doesn't sound good. I'll have to look it up. Let me see if I can find it here with my 2 bars of internet right now. But we can move forward too.
All right, let's kind of look at the state of the market. I'm going to go kind of more looking at it from a weekly perspective since we haven't been around too much this week. Seeing Nvidia, one of those ones, is having a great week. The S&P has had a really good week. That's back-to-back winners, kind of, and it's in the same pattern. It's not as pretty as yours, Kev, but I'll share my screen with the weekly because I don't want to break your internet. I'll
There
show
you
the
go.
weekly here on the Nasdaq or the S&P. But I mean, it's been doing this pattern of like 2 weeks down and then a bunch of weeks up, week down
Mhm.
and up, a couple weeks down, and we keep going, and we're just doing this over and over and over. And I mean, it's still in the oversold territory on the weekly. That'll change when it closes here in an hour. It'll start to move back up, but it looks like the S&P still has got room to run. When we look at the Nasdaq, same kind of thing. It's set up like it's ready to hit a new all-time high. Like it's ready to go to 21K, which would be pretty insane. Dow also looking a little bit different. Obviously, less tech focused there, so different setup. And then we can kind of look through some of the individual stocks as well. Apple has had, everything has rebounded this week after a few bad ones.
Yeah, this is my opinion on things. And again, you can go on my Twitter. You can see I've tweeted this out probably like 4 or 5 times at this point. I said it's a crash, not a correction, every time. Because you're not going to expect it when it happens. And a lot of people think that, okay, well, it's going up. It's so many days. It's 2 weeks straight green, and it's oversold in stochastic RSI. And I've been less likely to look at some of the technicals for some of the major indexes because I think that within them themselves, some of these smaller stocks, that make up some of these indexes are pointing at major pullbacks, right? If you can pull up NVIDIA or Apple or any of those on the daily, you can see that they're extremely overbought. And within a short period of time too, right? So I'm very much on the side that we're going to see the individual stocks decide where some of these major indexes go. And it's fairly fast, and I would expect it to be on a Monday morning open. I'm not saying it's going to happen this Monday, maybe next Monday or some Monday in September. I feel like the weekends are where people kind of position themselves for the week ahead. You probably get an idea of where the machines are positioned, where the flows are coming in and out. September, obviously, way better month than August in terms of price action. Doesn't mean that it's one of the best months on record for the stock market, but definitely we're going to see a lot more action. But I think that there's a good chance that we can continue to see, some of these scenarios like a double top very close to the S&P, maybe 5,600 seems like that's the next level where it could probably go to. I would even argue that, a double top at 5,670 or just filling the gap up at 5,644 in a short period of time. It's very possible. I'm going to share my screen real quick just because I want to show you some of the stuff that I'm seeing.
You sounded a little bit robotic and the video froze a little bit, so I didn't know if it was going to work. Worry about give it a shot.
No, you're good. Let's try it out. All right, we should have it on. There we go. Yeah, so I mean, you're seeing this on the daily. It's extremely overbought really quick. You can see there's nested waves within here. I'd have to go on like the hourly to show you, but it's an ABC corrective pattern. And if this is the case for wave 1, that's for wave 2, we would expect a major wave 3, despite how it looks on the weekly, for the S&P, and that could take us to 5,100 where the 200 moving average is, or it could take us a lot lower. I would expect it to be a lot lower. I think it's a bigger move. I think it takes us out of the 5,000, and that's if it obviously stays below the top of this. If we put a new high, then it's a completely different structure, and then we're just resetting the cycle over and over again. But I do think that we are running out of time to be playing these games. The NASDAQ, I still think they can go to 20,000. I think that's very possible that, say Monday or before, I guess, the volatility OPEX is, I think that's Tuesday or Wednesday. Before that ends, you could fill some of these gaps at 20,220, something like that. I think that we're going to fill out some of these gaps in terms of just liquidating people, trapping people. We're doing a very good at trapping retail right now. Everyone is extremely bullish right now. You're looking at some of these green candles. Just to look at some of the insanity out there, let's pull up Apple on the daily. Yeah, fuck me, right? Look at that. Look how many green days in a row that's had. Like this is kind of what we have to see. Like, does that look healthy? Does that look like everyone's buying the dip, or does this look like he got overbought extremely quick and a lot of people are getting bullish here? Don't forget, Warren Buffett did sell off his shares, and idiots are buying from Warren Buffett. I'm sorry, you're buying. He gave you his bags, and at this high level, and you're buying Apple. Okay, that's fine. You want to do that. I hope you like the stock. Go to Tesla, parallel channel moving sideways, getting to overbought fairly soon on the daily. Nvidia's one right here. This is 100 extremely overbought. Let me get some of this. This is the level we were watching. If I go into the hourly, just to show you guys, we got 5 waves here. 1, 2, 3, 4, 5. 3 waves here. 1, 2, 3. Very small. But this C wave here is an extended C wave. It's 5 waves though. You got wave 1. You got our dip in wave 2, wave 3. And then we got a little wave 4 dip, and then we get wave 5, which is pushing up. And where I think that could take us to is roughly, not on this one, I think it's on the daily. It's around 126 or so. I don't know if it actually hit there yet today, but 124, no, it would be like right around here. 126.30, I could see that being filled. Does it have to? Not necessarily, but I think that we did a great job of filling a lot of these gaps that were on this side. We filled a major gap that was right here. Between 120 and 122. And if we look at this on the daily in terms of how many gaps we've created to push up here, this just tells me that there's desperation. I wouldn't be surprised if you start seeing some 13F filings saying that a lot of these insiders have been selling in these major gaps. Retail is just willing to buy here, and I don't know why, considering we look at the credit card numbers and all that stuff. JP Morgan's correct about what they're saying. Then retail is buying this, and this is the worst possible time to be buying from insiders, right? You don't want to buy from insiders. You want to buy from other retail, usually when the chips are down. But I think this is telling us that we're probably going to see some type of major move, at least during the earnings call, which is in 12 days. I mean, we could get a little bit of a dip here, bounce off the 50 moving average, try and push up a little bit, and then the earnings call hits, and then next thing you know, you're at the 200. Something like that is very possible. And that goes along for a lot of other tech stocks. The main thing that I'm really watching, though, is the VIX right here. Because a lot of people are saying, I'm seeing posts about it. We're seeing a lot of people get back into the VIX, and it's gotten crushed significantly recently. But what we have to remember is the VIX went all the way up to, what is that, 65.73. I feel like this number changes every day. I remember I saw it at 67, but it's recorded here at 65.73. And then it got crushed like crazy. I mean, if we look at where the VIX was to where it is now, this is down 77, 78%. I took profit up here, luckily, but I still believe we're going to see another major VIX spike. And the reason I believe that we're going to see that is because people are leveraging once again. They're doubling up on leverage, and we're seeing that with the Nikkei. Last night, and I got too many fucking lines on here. Yeah, I just need one down. But this is what we're looking at for the Nikkei. Extremely overbought, up only, right? Look, 50 moving average on the week stays right below it on the daily. If you pull this up on the weekly, you're above the 50 moving average. So that's a very easy thing to get tricked by and buy into. It's like, oh, it's above the 50 moving average on the daily, but look where it stopped. I mean, on the weekly, and then on the daily, it stopped right here on the 50, and it's between the 50 and the 200, right? And it's extremely overbought. And this last night alone, 1,300 points, up 1,300 that one day, up 3,217, up 414, 258 actually down here, up 193, up 1,200. Like the Nikkei is just panic buying, and that's because they said they're not going to raise rates until next year. But then at the same time, you look at the yen, where if I could find this bullshit over here, and the yen is just like, remember when they were intervening up here to make sure it didn't go above 160? Well, now they're kind of doing the same thing down here to make sure it doesn't go below 141. So Japan is just trying to save their currency, save their economy. Eventually, that's going to not work out because traders and people who are in this market right now are extremely greedy. They're doubling up on leverage. They're doubling up on the carry trade. The carry trade is not done yet. And when that does absolutely pop because they have to raise rates or banks start going bust and they have to increase liquidity in some way, you're going to start seeing a lot of these equities, a lot of these positions that the Bank of Japan and Japan has in itself absolutely offload. Since we did the last show, which was on Monday, we saw that the Prime Minister is set to step down. And we also saw that one of the ranking members in the BOJ is also resigning. I guess they just don't want to deal with a lost decade because we're pretty much in the same spot as 1989, 1990. Question is, when is the equity market going to drop? And I think that's kind of a sign that they expect it to.
All right, let's go ahead and move to crypto. We're seeing a nice little bounce here. There's also a ton of options expiring on Bitcoin today. It looks like things, maybe people are closing their shorts. Maybe they're expecting a good move up because we're just under 60K again. We've been in this just incredibly boring range for Bitcoin. Like it is just, and that's why, go off topic for a second, I'm so happy that football is coming back. Like I'm comfortable setting up my auto buys on Bitcoin and a few others and just, not sweating when I'm going to buy crypto, just enjoying the fall, favorite time of year. If it dips harder, I'll keep buying. It's fine. But man, it is just a fucking snooze fest in crypto.
Yeah, and I mean, let's put it this way too. Crypto is being artificially held. Tether continues to print, right? And anytime you saw it go right around that 57 level, got bought right back up. So, I mean, there's so many things in crypto that are just absolutely fucked. I haven't even really looked at the charts for crypto. It's been in this long distribution range. If you're asking me, when I look at that, that looks like distribution, looks like a triple top. Am I worried about it? Not necessarily. I don't want to buy here. I didn't want to buy here when the ETS round. I don't want to buy here now. It's going to have to make its mind up, go one way or the other. I think that's the greater equity market and the global economy is going to kind of decide where liquidity goes. I think it's probably going to be drained from assets, maybe into treasuries, but I think that Bitcoin is no different than, say, a stock at this point. It's just going to follow what TradFi does. And right now we're at the 15 to 200 right here on the daily. I mean, you're barely above the 200 moving average. I wouldn't be surprised if this doesn't even move until maybe September. I mean, that's very possible. We've been sideways for so long. Do I think that there's a good move to the downside? Yeah, I think that the 50% retracement for Bitcoin is feasible. I think 30,000 is a good level. And the reason I say 30,000 specifically, that's conservative. And it's also just kind of where Bitcoin pumped from. I think that's going to be an easy level to get to once you get below that 38, 37,000 or so, right, where people are buying the ETFs itself. Once it starts to print red, you start seeing the greater, broader financial markets kind of sell off. Probably going to be able to get down there $6,000-7,000 to 30,000 or so. Is that where it holds?
Want to make
Who
another bet
knows?
on
I
this?
don't think so, but who knows? Not at all. Let's put it this way: I have bet so much on this market's downfall to the point where I don't want to even look at anything ever again. I've taken profits when I can. I choose just not to bet this time around. Let's put it this way: I've been so I've underestimated. I don't want to say fraud because I don't want to quote the Big Short, but I've underestimated uh, the fuckery of this market and institutions and banks and liquidity to the point where I know I'm not wrong in terms of where the destination is. But these motherfuckers have taken so many detours on this ride that, you know what, you're better off just kind of taking your mind off of things. I'm going to say no to your bet. I still think Matic is going to 30 cents, if not less.
I don't care about
But
Matic, or I don't hold any of that garbage. I just don't.
it's all shit. What were we buying this stuff in the first place for?
I don't know.
We can buy Chuck E. Cheese tokens instead.
I was buying monkey pictures back in 2021. Okay, like, and maybe those things will have a comeback, but I'm not going to be involved in it.
I'm so done with all that shit, man. I want real things. I want seeds. I want to be able to grow organic.
Speaking of real things, gold, 2,500
yeah, we gotta bring that
for
up.
the first time. We should probably mention anything else on Bitcoin. I still, like I said, the not active trader in me is still totally fine DCAing here, and I will continue to do so.
Totally
anything that let's finish crypto, and then we'll end on gold. So anything else in the crypto market with any alts, Bitcoin dominance, stablecoin dominance, anything that you feel like is worth looking at?
Yeah, I mean, Bitcoin dominance. I think Bitcoin and gold actually go really hand in hand, so it's a great segue. But Bitcoin dominance is probably going to go a lot higher. I don't make the rules. It just seems like that's the way, right? No one's talking about all these fucking altcoins. No one's talking about, Cardano. No one's talking about, really, Solana has dropped off the face of my Twitter feed. No one's really talking about it. I see a few people are still Solana maxis. Totally fine. I don't care what you're buying. But it seems like that hype that we saw when it started going close to that 200 level absolutely has fallen off. AVAX is gone. Link is gone. No one's talking about any of these. So you kind of have to look at Bitcoin dominance because I think people have more faith in Bitcoin, especially around election season and with the ETFs out there too. I think people are feeling a little bit more safe. Maybe that transition and flow of capital from alts into Bitcoin and stuff like that seems a lot more likely, but that's also how distribution works within the system. Looking at Bitcoin dominance, I think that's going to go higher. I also think that's, stablecoin dominance probably going to go a lot higher too. It's very possible Bitcoin dominance and stablecoin dominance go up together, or if Bitcoin dominance doesn't go down nearly as much as the alts, but USDT dominance continues to rise. We talk about, and this might even be a really good segue into also currency and how Bitcoin, gold, and the US dollar are all interconnected. But our base case right now is that gold is hitting all-time highs. It is broken significantly above this historical level. And we know how everyone says that Bitcoin is digital gold, right? You're way above this now. From where this should have been rejected at and it didn't, you're up 8.2% or so above this historical trend line that's acted as resistance significantly. And it looks like on the weekly, there's still plenty of room to go to the upside. I think that should be running out soon enough. But we're getting a lot of people who are pricing in certain things. And I think gold is the uncertain trade. You buy it when there's fear in the market. You're not sure what's going to be the next move. It kind of picks up halfway within the equity rally because people are like, okay, this might be a little bit too good to be true. Inflation might get worse out of hand. It's kind of the same things you heard back in 2007, 2008. And then what happens when the financial crash does happen? People are like, adios, fiscal gold. Michael Burry, by the way, offloaded his gold positions too. So that's something that you should keep an eye on. I don't think he did it at the wrong time. I think he actually played that market extremely well. My problem with gold is when we see financial crisis, let's go to the weekly. That's the Bank London. Here we are. And gold was doing extremely well, bouncing. It's going up. This is around Lehman Brothers time, 2008. Actually, no, not Lehman Brothers. Bear Stearns. All right, you get a bit of a sell-off. All right, rally into the summer. And then right around halfway July, you start seeing a pullback. And from the height of where it was in 2008 to where it ended up on the 200 moving average. It's a 33, almost 34% drop that we saw from, the height of Bear Stearns all the way down to Lehman Brothers / a few weeks after that in October. But it did find its feet. At the same time, the dollar rallied significantly. So if we look at 33% from where we currently are, just, let's just have some fun there. It puts us below the 200 moving average. But if we want to use the 200 moving average as a level that we could find some major support, I think that's a great level. That's 23% down from where we currently are. If you want to say 33% because liquidity is the issue and you're going to offload gold for whatever price you can, we get a bit of a fire sale. Well, then that kind of puts us right around here, which would be the October 22 lows for gold. Obviously, you get rejected off this trend line, and maybe over the next few years, you start to get pulled down more in gold. Now, that's a long-winded answer for what I'm saying, but I think what I'm saying is that you would probably see in a financial crisis or some type of major sell-off in the market, gold go down. I think Bitcoin is going to just follow gold in that scenario, and the rest of the TradFi market, you're going to see a bit of a dump. And I think the reason you're going to see that is because the liquidity is going to be so dried up in the system that there's going to be a lot more people that are going to demand the U.S. dollar, right? We haven't been printing. I mean, we haven't been printing. We've been printing, but we haven't been creating debt as easily as we were back in 2020. Rates aren't 0%, so not everyone's taking out a loan. But since, we're going to start seeing a lot of things fail, there could be a case made that the dollar goes up extremely high. I still think that this 122 level, maybe even a little bit lower, let's pull this down a little bit. I'll say like 120, say like 120.5. I think it's a good level that we could see the dollar rally to. So if you're a dollar bull, I think that we're getting pretty close to the place where we could argue that there is plenty of room to the upside if something bad were to happen. Because now what I'm looking at is we're getting into this triangle, right? And we hit top, bottom. We almost got to the top, but we're finding it here. We found support on this line right here, this yellow line. Get rid of the moving averages so you can see. And we got this top resistance line here, this bottom white one here, just coiling up. It's going to make a move. And this is on the weekly. That's what's even scarier, right? If it's on the weekly, it's probably going to tell us that we're going to break to the upside, especially since we came into this from the bottom. So we went up, down. I would expect us to break out of this to the upside. And it kind of lines up with everything in the equity markets, treasuries, the yield curve needing to revert, and, a VIX spike. I think that's just when you see a lot of people start to lose money, you start to realize how important the dollar is and how important it is to create debt in the system. Otherwise, we're probably going to see more chaos and price volatility. I don't think the dollar is going to die, though. I think that's going to be a staple when we do see markets finally bottom. And then in that case, that's when you'd probably see the flip from a dollar heavy into probably equity heavy. So I think that's kind of the play if that's what happens as history has repeated itself. But I think that Bitcoin is going to react more like gold and TradFi, and the dollar being so strong at that point could hurt finding support for some of those assets.
Yeah, we have seen a bit of a divergence with crypto and equities. So keep an eye on that. All right, that's going to do it for today. It was good being back, chatting with you, Kev. We're going to do it again on Monday as we start. It's one of those weeks where at first glance, it's like, there's not much going on, no big earnings, no big data releases from, with inflation or jobs. Powell speaking on Friday, but that's going to be a nothing burger. There's always something happens in those weeks. Maybe it's Japan, maybe it's the Middle East. Who the hell knows? But we will stay vigilant as always. If you haven't yet, hit the like button if you enjoyed today's show. If you didn't enjoy today's show, just hit the like button anyways. It doesn't cost anything. Give us a subscribe, a comment, whatever. We appreciate it. Have a great weekend, everybody. Stay safe out there, and we'll see you on Monday.
Take care, everyone.